please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome our next guest now, Anish Damania, the CEO and Head Institutional Equities at IDFC joins in. IDFC Securities, that is. Anish, hi, good afternoon and thanks for speaking with us. I was going through a recent note where you've come out with a strategy to shortlist stocks, and you say there are two key themes: gems in a rubble and to ride on horses that have delivered. So let's start with some gems in this rubble, which is the market. What are the themes or the stocks that you think could still deliver growth in this volatile environment?
Yeah, so, going back on a theme with a little bit of a background there, you see lots of fund managers had called up and said that India market is expensive, but Indian stocks keep on performing. So could you, find out what's happening there? And when we did this study, we found that, if you were to select purely on the basis of value, then those stocks had underperformed. Till FY17, quality outperformed majorly. But after FY17, if quality did not have growth, it kind of underperformed. And from FY10 onwards, growth has been the central theme, and it probably got more accentuated from FY17 or 18 onwards, where growth was probably the major criteria for any stock price performance. So what we have seen, wherever there has been disappointment, even if it is in quality stocks, all those stocks have underperformed. What we have tried to do is therefore now try to find out what stocks have underperformed, but where the causes were either company specific or something like a GST or demonetization led demand postponement or some small hiccups like that, and then going forward whether we are confident of growth coming back or not. So there are this list which we call gems in a rubble, which basically are the stocks which are underperformed, and where we feel that going forward we'll be seeing growth, and therefore the stock price performance should come back to where it kind of dropped from.
So I was actually
so that is one list.
Sure,
and
I was
out of that list,
going through that list. So I just had a follow-up question there. Within that list, Aurobindo Pharma forms, it is in that list. I mean, we've seen the numbers of Auro Pharma, they were weak. We saw the pricing pressure that the company spoke about. Would you still be hopeful with stocks like this?
Yeah, so we were sort of looking at a little better numbers, but they have disappointed. And my theme very clearly says that if growth is a disappointment, then valuations will not be a big criteria for driving the stock price. So, so obviously our analyst has cut numbers further. But having said that, I think if growth continues to be a disappointment, I think Aurobindo will not be a stock which will perform, though it is there right now in my portfolio, as we believe that growth would come back there quite well as we kind of go into a depreciating currency scenario and a stabilized US dollar revenue, US driven revenue scenario. But that doesn't seem to indicate so far. So I would say that that is one stock where, though I was positive, maybe that's something which may not hold true.
Okay, by the way, HDFC Bank has made the low of the day. HDFC as well has made low of the day. Just pull out these two stocks. So obviously there's been a bit of a pressure that some of the largest stocks are putting on the markets. That's HDFC Bank right now. And even HDFC seeing quite a bit of decline at this point in time. Anish, hi, good afternoon. I see that in your top picks you have HPCL. You reckon that most of the damage is done? Because we don't know whether, if the crude was to move above 80, what would happen with marketing margins? There's talk about perhaps petrol and diesel future as well. What convinces you about HPCL?
So one of the things is that we did an exercise where we found out that even if you were to slash the marketing margins by half, the company would be trading at about 10 to 11 times forward earnings. And given that kind of a scenario, we feel that it has been more than discounted in the price, and even a slight kind of differentiation from where we expect it to be there and where it could come down to, we would feel that there is significant upside possible. Also, if you look at the recent events, the price increases have immediately started after the election was, the day after the election was over, and we have started to see them kind of catching up, trying to catch up with the increases in the crude prices or petrol and diesel prices internationally. It has not caught up to that level, but given the fact that prices are increasing every day, that might happen. So they were looking at about 2.8 rupees gross margins. I think if the prices go up by another 1 rupee 20 paise from here, you should achieve that number. And it seems that they are increasing prices by about 20 paise to 25 paise every day. So if that trend continues, then it's just a matter of time before they kind of achieve their gross margins. We have seen that scenario happen after the bipole results of or elections of Uttar Pradesh, in Uttar Pradesh, where you saw immediately after that the gross margins touched somewhere around 3.1 rupees per liter. For a sustainably long period of time, trying to recoup a lot of those losses which were incurred when prices were on hold. So I think from that point of view, the Anish, bad news is in the price, and if the good news comes through.
No, my question here is, and I completely buy your points, but the basic difference was that now we are heading very close to other big state elections and general elections as well. So do you think that room is no longer there? I mean, the amount of time is now, after Gujarat election, there was still time, right? And we saw that. Now that Karnataka elections are done and we have seen price hike. What I'm trying to say here is 3 months down the line, if we see a big move in crude prices, after that the legroom would be limited with the government, right? Because then we would be very close to big state elections and the general elections right after that.
True, that is also, that could be one of the points, and therefore, we have seen a large-scale underperformance of the OMCs, irrespective of where their financial position is or where their growth position is. So from that perspective, one can say yes, there's always that risk, and I will never be able to convince people who have that risk in their mind, because it's a divided kind of an opinion on that front.
Okay, all right. Well, I just wanted to end by asking you about the aviation space, because in your list you also mentioned names like SpiceJet. Numbers have been fine, but once again there's this whole crude angle that crops up, right? There's so much competition as well. SpiceJet hasn't gotten hit as far as yields are concerned, but the entire industry is going through problems. Do you think that you would still sort of stick your neck out and go with some of these names?
Yeah, because if you were to look at the next 3 to 4 years, you are going to see a lot of regional routes or regional airports open up, and SpiceJet has been at the forefront of driving the regional connectivity. So you see, despite the fact that there were price wars, the yields of SpiceJet were significantly better, and if that is the case, you can't have price wars forever. So if that is the case, then the profitability growth over a 2-year time frame could be significantly higher for SpiceJet. So as a result, what we feel is, SpiceJet is among, if at all I have to look at an airline company, then SpiceJet offers me the value proposition. In the recent past, the stock has underperformed. It has come down from a high of about 200 to about 120 odd now. And therefore, there is enough room for us to have an upside surprise.